Palantir shares have been on a tear this year. The stock up just around 40% since the start of the year, driven by excitement surrounding the AI boom. In an exclusive interview with Yahoo Finance, Palantir CEO Alex Karp discussed the company's AI platform and ultimately what it means here for customers and investors. Take a listen.
What they're going to find is the large language model is much more like a chemistry experiment, the outgrowth of which is something that is useful when refined, where we impose the logic of your business on the large language model in the security and intellectual logic of your business. And this is transformative. And what it means for investors and others is there is value in this market. You can identify where the value is very easily.
Prosper, growth, and bullish. Palantir Technologies, known for its cutting-edge artificial intelligence software, empowers businesses with advanced data analysis. Its platforms, like the Palantir Artificial Intelligence Platform and Palantir Foundry, are revolutionizing big data analytics. As of July 1st, Palantir stock has surged by over 52% this year and jumped another 8.06% in the past week, trading at $25.49 in pre-market hours. This boost follows a key update. Palantir is expanding its partnership with Voyager Space. This builds on a June 20th agreement where Palantir will provide exclusive software for the Starlab commercial space station, a venture by Voyager Space and Airbus. In February, Palantir and Voyager Space agreed to a memorandum of understanding to boost national security within the commercial space sector. Voyager Space brings a wealth of experience, with a track record of over 2,000 spaceflight missions. With Palantir and Voyager Space's bold new steps, how high will Palantir's rally climb next? Brokerage firm Mons, Crespi, and Hart recently downgraded Palantir to a sell rating and set a target price of $20 per share. Analyst Brian White thinks investors might steer clear of software stocks that are seen as too expensive, believing Palantir's current valuation has become excessive. As of June 28th, Palantir's price-to-earnings ratio had climbed to 211.08, which has risen since April. This high price-to-earnings ratio suggests the stock is overvalued, meaning investors pay a premium for each dollar of Palantir's earnings. Palantir's stock soared 167% in 2023, which was already expensive as we entered 2024. With another 49% rally this year, we think the valuation has now reached a dangerously high level, White stated. While the brokerage acknowledges that Palantir could benefit long-term from the rising artificial intelligence trend and global political instability, White issued a warning. He believes that Palantir's high valuation, the current pressure on software firms, and inconsistent revenue from government contracts could lead to future problems. Yet, despite the downgrade, Palantir's stock has been climbing. The company secured and extended several defense contracts in the first half of 2024. The U.S. Army extended its Maven Smart System contract with Palantir for another 5 years, worth almost $90 million annually. Palantir also landed a significant deal with the DoD's Chief Digital and Artificial Intelligence Office for AI-powered operating system licenses, which could be worth $480 million over 5 years. On the other hand, in the first quarter, Palantir's revenue jumped 21% year-over-year to $634 million, with $257 million coming from U.S. government contracts, marking a 12% YOY increase. The company reported its sixth consecutive quarter of GAAP profitability with $106 million. Palantir has been actively promoting its artificial intelligence platform interface to corporate clients. In May, it inked a $19 million deal with the Advanced Research Projects Agency for Health to enhance healthcare services using machine learning. U.S. commercial revenue surged by 40% year-over-year to $150 million, and the number of customers increased by 69% yearly to 262 clients. For the second quarter, Palantir projects revenues between $649 million and $653 million and has raised its full-year 2024 revenue forecast to slightly above $2 billion. Dan Ives, an analyst at Wedbush Securities, recently told BNN Bloomberg that Palantir stands out as the leading artificial intelligence company with real-world applications. He believes the company's monetization efforts begin as the artificial intelligence industry evolves. Imagine a wholesale supplier hit by a severe storm disrupting one of its distribution centers. Management needs a quick way to find alternative supply routes and assess their impact on profit margins. Or picture managing a company's inventory and needing to understand how changing prices will affect demand. Maybe you want to streamline payment processing by integrating purchase orders, invoices, and warehouse receipts. These scenarios all showcase the power of Palantir's artificial intelligence platform. Palantir's artificial intelligence platform uses large language models to let clients ask complex questions in plain English and get actionable answers. Selling such a sophisticated platform isn't easy, and potential clients often struggle to see how it fits their specific needs. To tackle this, Palantir runs boot camps where potential customers create tailored use cases for their businesses in just a few days. These boot camps have proven highly effective, leading to a surge in Palantir's U.S. commercial customers. This strategy led to a 40% increase in U.S. commercial sales to $150 million and a 27% rise in global commercial sales to $299 million in the first quarter. Government revenue grew more slowly, up 16% to $335 million. Cracking the commercial market is crucial for Palantir's long-term growth. Overall, the first quarter sales jumped 21% year-over-year to $634 million, and Palantir saw a boost in profitability. But not everyone is convinced. Will Palantir's aggressive push into the commercial market be enough to secure its future? Share your thoughts in the comments below. If you found this update helpful, hit that like button and subscribe for more investing insights.
Palantir has a tangible response to those critics. They said it was too reliant on government business, but it's grown its commercial business. And as I've said, it's growing its commercial business probably stronger than it's growing its government business. They said Palantir wasn't going to be profitable. Well, now it is profitable, and it's been profitable for several quarters, and it's projecting profitability to grow over the next 5-10 years. They said that now that it was growing on the commercial side, it was going to put its government business in jeopardy. That hasn't happened. As a matter of fact, over the past several weeks, we've just heard of Palantir getting contract after contract with the U.S. government, and those are one bid contracts. Palantir's not even the government's not even bidding against Palantir, which is almost unheard of.
Moreover, Palantir has a big fan base among retail investors and has sparked heated debates between its supporters and critics for years. But the company is steadily addressing the critics' concerns. Let's look at two major ones. First, Palantir's ongoing losses were a major issue. This was a valid concern as the company struggled with annual losses until 2023 when it finally became profitable. Palantir has now reported net profits for the last 6 quarters and significantly boosted its operating profits. Second, critics targeted Palantir's heavy reliance on stock-based compensation to reward employees, especially top executives. Issuing many new shares to pay employees dilutes existing shareholder stakes. However, as Palantir's revenue has grown, it has been cutting back on stock-based compensation. Stock-based compensation also helps companies conserve cash. Palantir ended the first quarter with $4 billion in cash and investments and no long-term debt. Some investors are still wary of Palantir because of its steep valuation. The stock trades at nearly 25 times its current sales. This is less expensive than CrowdStrike, but more costly than Snowflake, on both of which are high-growth software companies with market caps under $100 billion. Palantir's valuation is higher than its historical average, but it's also the most profitable among these peers. Over the past 4 quarters, Palantir has earned nearly $200 million in operating profits. In contrast, CrowdStrike made just $24 million, and Snowflake suffered a staggering loss of just over $1 billion. For those considering Palantir stock, patience might be key. The best approach could be to buy in gradually and regularly to benefit from any price drops. This dollar-cost averaging strategy can help mitigate short-term risks when dealing with high-priced stocks. Palantir has established itself as a leader in data and artificial intelligence management. Despite its high valuation, its growing profits and solid financial footing position it for long-term success.
But then, like Dan Ives, he's probably the most bullish person on Wall Street. And he certainly sees upside in the stock, and I agree with that. I think eventually the analysts will get on board with it. Maybe they won't, I don't know. But in the end, that just means volatility. Right now, the trend is up. When the stock is down, it's usually a good time to buy it.
The release of OpenAI's ChatGPT in 2022 kicked off a boom in generative artificial intelligence, revitalizing companies like Palantir. But with Palantir's shares climbing 73% in the past year, is all the growth already factored in? Let's see what the next 5 years might hold for this software giant. Palantir's future will hinge on integrating large language models and generative artificial intelligence into its data analytics tools. Yet, the commercial landscape is fiercely competitive. Competitors like Snowflake and Microsoft Fabric offer similar data analytics without Palantir's controversial reputation. They also have their own cloud services, while Palantir's Foundry depends on third-party providers like AWS, Google Cloud, and Microsoft Azure. Conversely, Palantir's government sector seems poised for a significant upswing. With global tensions escalating in regions like Europe, Africa, the Middle East, and Asia, the demand for Palantir software is rising. There's also a growing need for automation, driven by personnel shortages and technological advancements like drones. Palantir's strong ties with the U.S. government are paying off, too. Palantir recently secured a $480 million contract with the U.S. Army for the Maven Smart system. This system leverages artificial intelligence and computer vision to quickly and accurately identify enemy targets. While Alphabet backed out of this project in 2018 due to ethical concerns from its employees, Palantir has doubled down on its defense work, showing resilience to such pressures. Palantir's year-long rally reflects its dynamic growth and strong partnerships. The company's extended alliance with Voyager Space has significantly boosted its stock value. Key contracts with the U.S. Department of Defense have also contributed to this surge, defying analysts' warnings about its high valuation. While some investors worry about the stock's steep price, Palantir's consistent profitability and strategic moves into the commercial sector demonstrate its resilience. Its future will depend on navigating fierce competition in commercial artificial intelligence and leveraging its defense contracts amid global tensions. Can Palantir keep climbing? And as Palantir pushes forward, how high can this artificial intelligence powerhouse soar, and what challenges will it face next? Share your insights in the comments below. If you enjoyed this video, you might also like our hand-picked, action-packed newsletter about Palantir. Subscribe now at wiseinvesting.com. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about Palantir stock, just click this video here. Thank you for tuning in, and stay tuned for more exciting content in the future.